Good morning,
Okay.
everyone. Welcome to Unconventional Wisdom, the MMT Investment Show. Good topics today. We ended up planning out ahead of time our topics for these upcoming weeks, and it just so happened that this week we are covering why to become a self-directed investor. And I think that's the most ironic, hysterical topic they could have possibly landed on today.
Right.
Because we all know what's going on. So I'm sure it's going to be a great episode. I'm joined with a great set of panelists here, Randy, Tim, and Joe. They're each going to be helping me come through. Maybe Deshaun will come in here and help us out as well. We have a comment box on Facebook and YouTube Live. Feel free to use it. Feel free to chat with us. Let us know your thoughts. Ask us questions. We'll get to them right away. And we love engaging with you guys. So thank you for being here. Joe, first of all, how was the MMT week? How's everything running? How are you?
Okay. Good morning, Micah, and morning to everybody that's going to participate today in this in the podcast. I have to apologize. You wonder I have on a coat, a big woolly coat here. That's because it's 32 degrees here and I'm in the process of moving the room. And so they were nice enough to give me this room next door, totally vacant room. That's why there's a little echo. Plus, I'm having to use the hotspot on my iPhone, so I don't know how good the stuff is going to work here. But, it's going to be okay. This is a crazy day, like Micah said, for this topic. Technically, the topic is why become a self-directed investor as opposed to using a broker. There's lots of good reasons. I'm going to mention a few of them and pass it on to, I think Mike Deshaun will be here in a little bit, and over to Tim and over to Judy.
There he is.
Here's Deshaun.
How's it going, Deshaun?
Hey, Deshaun. Number one, the main reason why you should be doing your own investing is nobody cares about your money as much as you do. That's the big primary reason. There's no broker at the end of the day cares about your money, as much as you do. It just doesn't happen. And then another reason that you should become your own. A long time ago, back in the old days, it was very difficult to be a self-directed investor because you couldn't do anything. The brokers had the only access to wire lines to the brokerage houses, and the internet didn't exist. We're talking 20 years ago, okay, and prior. And so you had to either go stand in front of the building where the broker was until you got inside, and then sit at his desk while he could access the various markets and stuff. You tell him what you wanted to do, and he'd do it. And that was it. That was the total control you had. You couldn't go research on the internet. I guess you went down to the local library and got some books on some stocks or whatever, Wall Street Journal stuff. And so you just didn't have any ability to do it yourself. So you had to use somebody, and so that they would do it for you. Secondly, or thirdly, back in those days, the commissions were extremely high. I know first trade I had E-Trade, the commissions were like $29 or something like that. It's huge. Now they're less than 50 cents. But so you just didn't have access. But now it's all changed. About 20 years ago, that's when we started compound stock. About 20 years ago, and all of a sudden I was with Merrill Lynch, and all of a sudden I discovered Merrill Lynch really didn't have very good access to the internet, hardly any at all at that time. But as weeks developed and months developed, all of a sudden you could get quotes, you could get trading pages, you had cheaper commissions, you had all kinds of things that you were never able to get before. Now, the difference is when you're doing it for yourself versus paying a broker who doesn't have your interest lined up, you have your interest. It just doesn't work. For instance, they just read the brokerage community. Things change very slowly on Wall Street. The brokerage community just now discovered compound interest and how powerful compound interest is. If you go back 20 years and read articles on how to build wealth, and they say, well, first you got to save, and now you got to have 401k, and you got to have a little house and a little car, and for 35 or 40 years, everything works perfect. You don't get sick, you don't get divorced, nothing happens. You'll have enough money, and you'll probably put your money in our fund here, and we'll get you 5%. 5% overall. If you put it, actually you don't have $1 million in there. 40 years from now, $1 million ain't gonna buy you a meal. And it's compounding. They're right. Compounding is powerful. The problem is they can't get any rates. They can't get any returns. If you compound at 5%, it's 40 years. Still not going to have any money. Considering you're 40 years down the road, and a lot of things have changed, and things are a lot more expensive. When Randy and I used to do those seminars on compound stock earnings, we showed how to take $10,000 was it, Randy, and turn it into $3 million in just 10 years. We were using something like 10% a month or something like that. The brokers don't have that ability to produce returns. They just don't have that ability because they don't. You look over the last 100 years, and the average stock market returns have been plus or minus 10% a year. Over all that time, they're still only 10% a year. Usually less than that. Right now, most funds are lucky if they get 5% a year. But because now they begin to tout compounding, but they don't know how to make the returns. I mean, all that time, things have only gotten better and better and better for the brokerage community. Easier access, easier trading play, everything. The same things happen to me as happened to them, and they can't get any returns. And that's
go ahead. For you first, Joe, and then anybody can pitch in because it's kind of an interesting concept. Are they really not able to? And if they're not really able to, produce solid returns, is there any sort of intentionality behind that and not wanting to, get you to expect a 30% return? So if they keep it at 5, then that's okay, or is it just something that's out of their control? What do you guys think about that?
Okay, I'll give you a real quick answer. Yes, the base control. Number one, we haven't gone through Merrill Lynch's training program. They don't train you to take advantage of things in the marketplace, trading platforms, all that kind of stuff. They don't do it because they've never done that, and they just want you to. It comes down from some office up in New York and says, tell your clients we want you to buy XXX, and you buy XXX, and if they don't say yes, well then drop them, hang up the phone, and call somebody else. They just want you to make one call after another. They have no financial abilities. They're just a bunch of dumbasses. That's all they are. And I've never seen one that wasn't. And that I'm talking about brokers, not just Merrill Lynch, but all brokers in general. And because that's not how they're trained. That is not how they're trained. You're going to be your own broker. I mean, you do this stuff, you do it right, you learn stuff. You take our programs, make a hell of a lot of money. But they don't have that. That's not their game plan. That's not how they run their business. I'm talking too much. Go ahead.
And the brokers want to make you think it's so complicated and complex that there's just no way that you could possibly do it on your own, so that they keep having your money to use so that they can make money. They make money with your money. They don't make money with their own money. They take your money and then they leverage it up. So they have $1 billion. They don't just invest $1 billion. They go borrow and leverage up 5 or 10 times to use that money to try to make an income. And if they didn't have your money, they wouldn't be able to do that. So they just want to keep you as a captive, thinking that, oh man, there's just nowhere I could get anything better, so they can use your money.
Yeah, I agree. And I think, their incentive is to trade. They make commissions off of trading. So as much as they can churn and burn, I think that is their incentive. They package up a package of investments that they say they tailor, to a client. But I really feel that they just use us as a cash source, But I think their main objective is they make their money off of trade, off of commission. So the more they trade, the more commissions they're going to make. If it works out for us, great. If it doesn't work out for us, that's okay. And I think Joe hit it right off the first, which is it's not their incentive to make us money. It's their incentive to make just enough money to keep us hooked.
As a client, yeah.
Yeah.
One time I was at a meeting, Merrill, in New York, and there was a podium up there, and there were about 25 or 30 brokers. And this guy comes in, he was only about 3 feet tall, gets behind that podium, and takes fits like that and goes wham on the podium just like that. He says, "You fellas can take your clients' money and do anything you want to do with it. Don't worry about them. You can do that." And that's what's the concept. It's the same concept. They're just a bunch of crooks. They are crooks. I give you a good example. The Sean
Hey, yeah. Hey, man, I want to know. Yeah.
Somebody's got an echo. Not Joe, not me, not Deshaun.
Me, I'm in. Nobody in my room at all. Anyhow, Deshaun relayed this
there it
story.
Well, actually, hold on. I feel like you guys, do y'all need to talk to anybody? I feel like y'all are all like mad at just these brokers. Like, hey man, what? Look, here, I'm here for y'all. What do y'all want to do? Let me give y'all hugs or whatever. Like, geez, I feel like we're about to go to Merrill Lynch and just burn buildings down right now. Jesus.
I was going to relay a story to them that you told me. You told me. You know, better than now, whatever. The acquaintance of yours in Fort Worth, who's a broker, and he evidently y'all are good friends. He kind of knew something about what you do, and he said, "What are your returns?" And you told him, "I 25, 30% a month, whatever." And he didn't even respond. He just turned around and walked away because he's a stupid. I hate to have stupid acquaintances, but he's stupid. They are dumb people. They are dumb people. That's why they're brokers. You're broke. You're a broke person, and you want to help somebody else. So
well, give them a break. If it's the thing where if you know better, you can do better. If you don't have, it depends on the mentor that you came up under. That's all you can do. So I'm sure these brokers are good people. We probably got some brokers listeners like, ooh, they hit the X button real quick. Ooh, don't want to get my IP address. Like, geez.
In Dallas, when we used to do those seminars almost every weekend, 200 or 300 people there, we could always tell when brokers were in there. Randy, remember this, brokers always didn't ever come up and talk to you, number one, and they always had on baseball caps and sunglasses all the time. Every time you knew that was a broker.
They were like in disguise, you saying?
Yeah.
On that vein, I would be inclined to agree with Deshaun actually, because, well, I mean both of you, but Deshaun, because as you said, Joe, they don't have the means, they don't have the training, they don't have, they're not equipped to even as a trader to even help you in the first place, and then they're also taught to, make more for the company. So
if you went to work for your, the first thing to do is you have to study all this stuff to pass and get pass the test. Okay. Mm-hmm. Once you do that, they don't care. They tell you we're going to send these trades down from our office up in New York, and your job to go out there and get these clients. We don't care how you get them, and just call them and you say, "I have a deal for you from our New York office." And if they hesitate, just hang up and call another person. Go from one person to another person, and that's how they do it. They don't have any basic financial. You don't have to have any kind of background in the market or anything to become a broker. You just have to pass the damn test. That's all you have to do.
Yeah. Randy, have you, in your years, had much contact with individual brokers or people that, have you been able to chat with some people that are really in that business, or not so much?
My experience with brokers was to set up my account, and then I started learning how to trade from Joe. So I've pretty much always been my own self-directed. And just a little interesting story right now, with the virus and everything and businesses that are shut down. Well, I was back home in Arizona visiting the family, and I wanted to go down to the broker and make a deposit. I went to the building and it was totally empty. and it was like there was no furniture, nothing inside it, and it was locked up. So then I went online and Googled them, and they had moved, but then they said it's by appointment only. So now you can't even like get in to see them if you had something that you needed to get done, and they keep moving around. It's like it's like they don't really want you to really come in. Just make your deposit and then and just leave us leave it your money. And it's like no, I've always just been self-directed. But one thing, way back before I retired, we were going through a lot of financial planning and stuff, and they would have the financial planners come in, and they try to make out your forecast for the next 10 years and where you would have income and where you wouldn't. And so I'd sit down and I'd talk to them and say, yeah, I'm planning on like 3% return a month, and they go, oh, no, we can't put that down here because that's probably not sustainable. So let's put down like 7% a year. And I go, no, I'm making 3% a month. I don't have to make 7% a year. Just put that when I make. They just couldn't. It couldn't go through their mind that they could put that kind of returns into the financial plan to see how much money that you needed to retire on and stuff. It was pretty fun.
Yeah. You kind of broke their brain a little bit with what you were doing.
Yeah. It was always like, no, you can't really count on doing this. It's like, well, it's been 14 years now, so it still works. And in fact, it gets better because every time there's something changes in the market, it just makes our returns even better and allows us to do more things.
Absolutely.
I've got a story that I think that Randy will appreciate. So we do have a broker that we use in my wife's 401k, and he comes and visits us once a month, every other month. And I got to talking to him about doing covered calls, and showed him a little bit about Randy's technique. Well, he's been writing calls for us for the last 6 months and has quadrupled our income in my wife's 401k. And now mostly all he does is do covered calls now. He was amazing. He had experience with writing calls before and had fallen out of it and got back into it. And now this is something he offers all his clients. And it's worked out well, but if it weren't for the covered calls, we'd still be making that 3 to 5%.
Yeah.
Let me just one thing in regards to what Tim's saying there. The reason that happens is because when you're doing covered calls, as you all know, if you had a bunch of clients, you don't have time to do it. Because that's in all justice to the broker, you didn't have time to do it. So that's why you need to be doing it yourself. That's why you need to be doing all this stuff yourself, because you've got time to do it. He didn't have time to do it in his office, and he's going to sit there, Merrill Lynch, let's say, he's not going to sit there and say, well, you got 2 people now to do covered calls for it, and that's all the customers you want. I mean, you should go out there and recruit people every damn day and have 50, 60, 100, 150, 200 people. So you can just call them and say, hey, we got specs on here you want to buy, so that kind of stuff. It's about all they have time. They don't have time to do, in their defense, they don't have time to do covered calls for more than 1 person, 2 people, maybe, something like that.
Yeah.
Totally fair point. So what do you think, transitioning into, what's going on currently, what do you think is the broker's position on these? Because, well, I guess they're not so involved, but the mutual funds that are suffering have other investments that are starting to take. So how do you think this situation will kind of start to evolve? Because I think that's a lot of what's going on here. I mean, at least what people are saying about it is like, man, I'm not willing to have brokers, take control of my money like this anymore. They're saying this is going to change, and obviously the mutual funds and everyone else is saying, oh no, it's not. So how do you think this will kind of change the landscape? Because regardless of if it works or not, do you think enough mistrust will be inspired in brokers and different things to actually change that climate? And Deshaun, actually, first, I'm curious in your take on that.
Um, I guess my short answer is no, just because how, like analogy, like mowing grass. Like a lot of people have lawns. Some people just don't want to mow their lawn, so they rather just hire someone to mow their lawn. So I mean, everyone has money. Some people just not gonna want to learn how to do this. They just rather just pay somebody. Hey, just give me what you can give me, like that. So I think it's just always gonna be like that.
Totally fair. Randy, what do you think?
Well, and because part of that is driven because everyone's always been told it's too complex. You can't really do that. Only us professionals know how to generate income for a year after year after year. And it just gets people afraid to touch their own money because they don't know how to do it. And for the most part, they don't know where to go to learn how to do their own money. And there's too many of those kind of fly by night kind of people out there that are just out to grab your money for a yearly like a yearly subscription, and then they never to be heard of again. And so people get afraid to do that, and they just don't trade their own money. But you can be like half good and beat the brokers at their returns.
Yeah.
And one of the things I think is just hilarious is everything that's going on now with the Robinhood and the is it Read It or whatever that that they use to communicate back and forth. That these traders that most of them haven't traded before until the pandemic, and they're really taking the brokers to the woodshed and making the brokers lose a whole lot of money while they're just I think they're just laughing every day about what they're doing to the market right now.
Yeah.
There is one bright spot though, and I believe the CEO of Robinhood, and he's right. They've got millions of customers, and he's saying it's changed the world. More people want to do their own investing. In other words, now maybe that's not the most advantageous way to learn it, Robinhood, but they got to start somewhere. And a lot of times they're going to, their skills are going to develop because they don't know what they're doing and they lose some money, but they like, the ease and you can do it anywhere and all the systems and cheap commissions you have today. So eventually I think they're going to come around more and more. And that it sort of is, they are adopting that theory that, hey, I can do this better than this guy over here.
Yeah, I think it's the younger generation that's taken that on, where the older 50-year-olds, 60-year-olds, I think they're still a little bit apprehensive about trying to take over control.
The reason the younger ones can do it is because they can't get a job, and so they're sitting around the house.
and they're used to playing video games, and they're just taking this thing like it's another video game. And
I mean, it looks a lot alike. It looks a lot alike.
Yeah, I mean, you look at what's going on with GameStop and the huge influx of retail traders that have come in to that. There's a whole lot of people jumping in and are seeing. They're getting their feet wet and they're seeing it. I hope it doesn't end in disaster for them when this thing turns. But we have an increasing interest in online trading that's going on, and I think that trend is going to continue. But I get that, people look at investing and it's just this massive world of complicated things. And I want to tell people, well, you don't have to understand it all. You can just do one thing, pick one technique, whether you're doing covered calls or you're doing micro moment trading, but just one simple technique that's repeatable and profitable, you can do. You can do easily. You don't have to understand the whole market. You don't have to go get a Series 9. And if you focus on just one simple technique, you can take control of your own investing and financial future. And I get that, when people get into their 50s and 60s, like I am, where they've been building a nest egg at 3%, and they've got 300,000 saved, they're very scared of losing it. And I can see where they'd be very apprehensive about trying to learn something. But I think if they just knew how one simple technique could really change the direction of their investing, I think we'd see a lot more folks coming in.
You're absolutely right, Tim. You're absolutely right. And that's why I think our techniques are so fantastic. a lot of things, particularly that would discourage me a long time. I've been doing this since I was 20-something years old, so 100 years, was that all the stuff my dad used to do, he did study companies. And oh my God, he'd get that information, what limited information they had, and he'd study that. He would speculate, this company's ought to do good. It ought to do good. They ought to buy the stocks. And it worked out for him over a long time. But painful, that's wrong with you. But,
and two things along those lines. First, all that stuff that's going on in the market out there, those are speculators. So all these young guys coming in and doing the GameStop and the AMC, and I forget what the next one they're attacking. So they're just going down the list of the heavily shorted stocks, and they're trying to play the game the opposite. They're all speculating. Everything we do and what we teach how to do is not speculation.
Right.
It's all based on a systematic approach of how to generate income on a weekly, a daily, an hourly, a weekly, a monthly basis to use your money over and over and over again with a process that it doesn't matter if your stock goes up, down, or sideways. You're still going to generate income, and you don't have to sell for a loss. So we're like the opposite side. But it's fun to watch what's going on out there. And just the second thing I'd like to add is this weekend I'm actually teaching a workshop of how you take dividend paying stocks and you can keep your stock to earn those dividends. But I'm going to teach you how to generate additional income each month without having to sell your stock, so that you can double, triple, quadruple the returns you're getting on your dividends. So it's a systematic, easy to learn, step-by-step process. So it sounds like I'm from Canada, but I'm not.
What's wrong with Canada?
Nothing wrong with Canada, but my kind of second mom, my best friend's mother was from Canada. So when we hear her talking, she's the boats and the and I also play on a team in the World Series every October out in Phoenix, and every one of them is from Canada, and I got joined on their team. So I hear all the A's and the boats and process, and it's always like okay. So by the end of the week, I'm saying A.
I think what we're talking and why we've been around so long and our returns are so great is that we never, just like Randy said, we never talk about speculation. We would never be a short seller or a long seller.
Right.
Because we don't believe in, you have to figure something out and hope and speculate that something's going to happen. What if these guys on this GameStop thing, what if they were using our concept of just trading, if you could short and long, just activity? Because that's all we got. We don't. Every morning we say during those sessions, we don't care if the stock goes up, if it goes down. We just want to go one way or the other. We know it's going to happen, and it does happen. Like today, the returns on there were some extra ones after we started this, but probably up close to 30% just for the day, 30%. But a mutual fund doesn't make that in 10 years.
Yeah. And I think there would be a much different response in this environment if people weren't so, forced into thinking like this. This is why this situation is happening, is because people are forced into, 5% or 2% losses a good year. And that is frustrating, right? To not know if you're going to go to invest or go to a bank and just put it away and make more money on that. Like that's a very, and that's the image that's kind of pulled onto itself over the years and solidified. So I would play devil's advocate and not say this is a speculation, but this is something else. This is an organized effect of knowing exactly of the few people that do know how call options work and expire, saying that this is going to happen. It's actually an organized, in my opinion, it seems a direct.
Yeah. It's an organized attack on the traditional stock market traders.
Exactly.
I like the way that Micah described that. He puts his hand up like he says, but this is this. What the hell is he talking about? This is this. Love it.
I don't want to say it's not speculation because it inherently is, but it's also something different. I would say.
Yeah, it definitely is an organized
Yeah.
speculation to try to drive a certain outcome, and they've been having success, and they're picking out the heavily shorted stocks and trying to get a short squeeze going, and just making phenomenal changes in those stocks. Carl was asking us what's the symbol for GameStop. It's GME, but I wouldn't. I mean, what's going on out there? It can change in a heartbeat.
Have you guys been watching it these past few minutes? So it's been halted 6 times in the last 10 minutes. I have it up.
Yep.
It came down to 250.
Yeah.
2 minutes later, it was up to 475. And then,
475 from
Yeah.
250 to 475, and then in the preceding 4 minutes, dropped to 120. No, 114.
Yeah, that's what Jim's saying here. Dropped to 132 from 450.
Yep. And then halted again, and then opened again and popped $40. It's at 155, and now it's halted again. So it won't stay unhalted for more than a minute.
Yeah, for those that don't know, that the stock market has these built-in bumpers that if something changes a certain amount, then they stop to let everybody kind of catch up on the news and stuff before they start trading again. So that's what's happening. It's moving too much too fast, and so they keep stopping the trading.
Yeah. One thing that I don't like about what's going on is it's messing up our platforms, getting traded in and out. Yeah, it's messing us up. And I look forward to having this done because, this morning it took me, my first trade, it took 30 seconds for the trade to execute. And for us, for MMT, that's forever.
Yeah.
Yeah, every morning I have 2 different broker platforms, and they're just slow for that first 10 or 15 minutes. I think they're just trying to catch up with all the activity that's going on, and but it's fun to watch though. It's fun. It's fun to see those guys get taken at their own game out there.
It is.
Well, we think about when you got all these young guys coming in and they're just buying up this stock, this GameStop, because it's going up. Well, they don't make any money. They almost were in bankruptcy before all this started, and they don't even realize that. So eventually, it's going to turn. It's going to turn. And those old guys in there that did the short in the first place, they're going to lose a lot of money for things they haven't told you. What are you going to do?
Have you guys heard about the last little detail that nobody's talking about on GameStop?
What's that?
In October, they filed a multi-year deal with Microsoft to transition everything digital.
Oh.
So in all this craziness, there is still a chance. I don't know. Well, I don't know because that was signed in October, and now all this happened. So
the games would be digital.
GameStop and Microsoft are partnering to take their whole platform. So I don't know what GameStop is going to become. Also, that brings a whole nother level because there was no news behind any of it.
Yeah.
Now, yesterday I heard about that, and I was like, oh, now there's.
So that's what those big old-time traders, they're trying to drive negativeness in the market, saying, but nobody buys a GameStop's game anymore. They all just rent it online. Like that's a bad deal. It's like, no, that means they get constant subscriptions over and over again. That's how these companies going digital are making their money, on the subscriptions. It's not on selling that, the disc with the game that you go load it on anymore. Everything's over the internet. So they'll probably be closing all their brick and mortar stores down, and everything to just be online.
Yeah, it's another Hollywood video story.
Yeah.
Deshaun, since you're the level head on this, what do you have to say to all the people talking about market manipulation? Because I see them saying about halts, which is silly. They just, it's how Phil's work that needs to process halts are legitimate, but TD Ameritrade, which I believe you're still on, or have you? Yeah,
I'm on both.
Has delisted GME and AMC, I think, from being able to be bought, and Robinhood just did the same thing. What's your take on on that from the platform?
Honestly, I'm gonna be honest with you guys. I have no take on it. I had a couple of my friends that know I do trading texting me, "Hey, be careful with this. Reddit's taking over. The Reddit army is doing this." I'm like, "Oh man, I appreciate you looking after me, but it doesn't really affect me." So I don't put any thought into it, to be honest.
Well, see, that's one of the nice things. Like what, Michael, what you and Tim and Deshaun do, you're in and out of positions in 30 or 40 seconds. So none of this stuff that's going on. You're looking at the advanced proprietary intraday streaming charts, and that's why you can do what you do.
Mm-hmm.
And you're just looking for the beginning of rising or declining cycles and the momentum, and you're in and out quickly. So all that other stuff that's going on with halting this or halting that is not impact at all for what you do. Then what I teach with the covered calls, we're always kind of doing the opposite of what the market normally does anyway. And so if really everything that's going on with all that stuff and everything going up, that it just improves because it's increasing the volatility, which increases the premium. So keep it going.
Yeah, absolutely.
Yeah,
Just want to check in and remind everyone we do have a comment box. If you just got here, we have one on Facebook and YouTube. They'll both be routed into us, so you can comment on either platform, and we'll see it here. We'll be able to answer that. So if you have any questions or comments, even if you disagree, we'd love to chat about that. So, what were you saying, Randy? Sorry, I didn't mean to interrupt.
No, I think I was, Deshaun and I just kind of get to sit back and look at it with skeptical amusement. What's going on with GME, and and then we just make our money. We do the same thing every day. We follow the simple one rule that we have, and we make good returns every day on a very, very simple technique.
And the other thing, Tim, is it doesn't take much money to do what you guys are doing. You're buying things at $1.20 a share. It's not 10,000, 20, 30, 40, 50,000, 100,000. You can have a small account and you can still generate really good income on it.
Yeah. And thank goodness Apple finally reported, and we've got our prices back to where they were. We had this huge buildup going into the reporting period that doubled and tripled our premium, but still, it's pennies on a dollar with what we do, and it's really the best leverage next to Randy that you can do for a simple technique. So.
Yeah. So what happens, of course, what you mentioned, Tim, is the week of earnings announcement, because there's so much speculation out there by those traders of what is it going to go up or down. The premiums for the options just increase astronomically, and so once they announce, then they all come back to normal. So I actually take advantage of that, and I'm able to generate even better income for that week. Because those premiums are so high.
Yeah. How are you doing this week, Randy?
Fantastic, actually. Last week, all the new positions that I entered were all closed out, back to cash in them, and this week I have 1, 2, 3, 4, 5, 6 positions, and they're all still deep in the money. So it's a combination of the selection of the company and where it is in its chart. And then what premiums that it has. So by doing all that, and the covered calls that I teach are in the money covered calls, so the stock can even go down and you still get called out, which is what we want to do. You listen to Wall Street, they talk about calls as being a bad thing, and you don't want to get called out on them. And it's like we do the opposite, and that makes it be a lot more conservative and still generate 4, 5, 6% a week on the returns. And so the stock can go up, down, or sideways, and it still works out just fine. It just so happens that all the positions I have are going up. So even though the market really dropped yesterday, it's okay.
Didn't matter.
It's almost back up to where it was yesterday anyway. So things go up and down, and we kind of leverage the fact that they go up and down in order to generate income.
Of every trading system I've seen, Randy, yours is definitely the least. How do I want to say this? I'll explain myself more, but it's the least finite. in the sense that you kind of work in zones. It's kind of like a zone defense, if you will. Like this is covered as long as we're within this place. This is covered as long as we're within this place. What type of stress relief does that bring to you not to have to worry about it? It has to stay above, 1650 or else.
Well, two things. One is, yeah, because of the position I enter, it can go in any of the directions, and it's okay. If it drops more than that, it's fine because I have a management technique to be able to keep generating income even when the stock goes down, and then keep it going until it comes back up. And it doesn't have to come back up as high as it started at in order to still get closed out, get all the capital back, and lock in the return. And so it's a whole system process. It's just not speculation that says, oh, here's how you pick it, and when it's on, then do it. It's if it goes this way, you do this. If it goes that way, you do that. And it's all a real simple to learn system, and you just follow the system. You follow the rules for whatever direction that it's going. And as long as you don't get too greedy and don't get too speculative, it can just be a real. In fact, covered calls, in the money covered calls are the least, are the most conservative thing you can possibly do in the market. It takes a lot of the risk out because it's a covered call, and that's not how the standard market uses it. They use it more for speculation, but if you learn how to do the process and follow the rules and don't get greedy, it can work out really good. And it doesn't matter if the market's going up or down; it still works.
And Joe, that's pretty much been your mainstay is covered calls, and I mean, the biggest thing that I've learned from you, Joe, over the years is you're very much a door number 3 type of person. Does that make sense?
I don't know what that means.
You just say you have something brought to you, and they're like, pick between this or this, and you're like, I don't have to. I can do this thing. I don't have to buy or sell it. I can kill it with dividends. I can use covered calls. I can TSS it afterwards, and then I can take it back and do something different with it. You always seem to have this creative third option that I think has built so many of the techniques that we have. Mm-hmm. Where, like, what's your mindset on how to approach the market with that?
I think, well, the two things, the covered calls, which is so straightforward and simple, and like Randy says, he didn't speculate. And now the micro moments, which is so fast for those that get bored with the covered calls, and move so fast and it's so profitable. And I can't think of any. I've been doing this, like I say, since I was 20-something. I'm 77, so 50-something years. And with the innovations that have been made in the trading systems, and the fact you can do it on a computer, is just limited what somebody can do. Even really young people. It's just happening.
Hey, you want to read that comment from Melissa?
Yeah, we got one from Ricky first. Yeah, let's do Ricky. Perfect. Thanks, guys. I've learned from all y'all. Hope to continue learning as much as possible, making dollars and cents. Yeah, he was on Micro Moment, I believe. What else was he?
Yeah, and he does cover calls as well.
Cover calls as well. Awesome.
Yeah,
yeah, Joe.
Pete does Randy's technique, which outperforms MMT every day of the week. Yeah, MMT keeps trying to stay in the game each day. Honestly, I think it's the team environment and the interaction each day. Well, that's nice things to say. You're
right. And that's one of the things is each of us teaches kind of a different thing, but we're not competitive against each other. Everything kind of builds on it, and it just all depends on what's the process that best suits your psychology, your mentality. You're conservative or a little bit more risky, even though nothing's risky. But we're not like out to say, oh, don't do his, do mine. It's like there's a place for everybody. And in fact, I do all the different techniques every day. I do the micro moment trading with some of my funds, and then I teach all the covered call stuff. So you can learn all the different techniques and you can do them all, and they're all can be profitable.
Absolutely.
The only thing that's wrong, she's not right, the exception with this, is that, Randy's returns are always higher than MMTs. I don't think so. I mean, we average over 100 a week now. I don't think we're averaging 100 a week. Unless you're doing, within those whenever you're doing those things you're doing an MMT. You know, I think
Pete and Melissa,
every day, don't you think?
Pete and Melissa like me, so they.
Yeah. All right, good time to mention our workshop. We're about wrapped up. Again, any questions anybody has, please get them in. We will answer those before we leave. So we have the dividend workshop coming up this weekend on the 30th. That's taught by Coach Randy, and he'll be going into dividends. Well, you can explain what you'll be covering in that workshop, Randy.
Yeah, it'll be there's kind of two groups of people out there. There's some people that have followed Wall Street. They buy stocks and just hold on to them to earn the 3 or 4% a year on the dividend, and they're kind of happy with that. I'm going to teach them how they can keep doing that, but also generate weekly and monthly income on top of that. That'll be far superior to the amount that they're earning on their dividends. Or there's people that I want to know what to invest in, and if they want to invest in stocks that generate dividends, I'll show them how to select good quality ones and be able to generate income on a weekly and monthly basis on top of the dividends, and they don't have to sell the stock. So that's what the focus is how to use a covered call with those types of situations. And I'm going to start from what's an option, what's a call, what's a covered call. I'm going to go through all the basics and then talk about how to use them and select positions as well.
Excellent. So the code below for that workshop is actually a 40% off code. Now it's the 28th, the end of the 29th, it goes off. This code expires, so we only got about a day and a half left on this, and then it will not work anymore, and then we'll have the event, of course. So just
so
so
they go to. Do they have to go out to, is it www.micromomenttrading.com is where they can go and register using that code?
Absolutely, micromomenttrading.com. We have a list of workshops up. We have a link in our YouTube bio as well, or if you're on Facebook, we have our website listed there. On the top bar, it'll be under workshops. The coupon code is used at checkout, just if you were buying a pair of sneakers. So yeah, just go through that checkout and then it'll all work. We've been getting a lot of people in this last week, Randy, so people are really excited about it. We're looking forward to it.
Yeah. Does Sean have something coming up? Don't you have a one-day seminar coming up?
Yeah, February.
February. Okay.
Probably more coffee. Yeah, trading with Deshaun in February. Yeah. All right, guys. Anything else for today from you guys? Any closing thoughts, remarks?
Well, Ricky says he's in.
If anybody wanted an update. Sorry?
I said Ricky wrote a note there that he's in with Randy.
Oh, perfect.
Yeah, good. We'll see Ricky during the workshop.
Marion as well. Yeah. Awesome.
Yeah.
Marion.
Good deal.
Good to hear from Marion.
If anybody was wondering, since we mentioned it last, GME dropped to 114, got halted back up to 200, halted up to 250, halted down to 207. Halted.
See, those short sellers can't help themselves. They keep selling short, and they get taken to the woodshed.
Yep.
Well, hey, if anybody did it this morning, they finally made their money.
If they closed before it went back up.
I mean, after a $400 drop, I hope you would close your short.
Yeah.
If not.
Oh, it's crazy. It's the Wild West.
Wow. All right, guys.
It's dropping like a rock. All right, guys.
Oh yeah, Joe.
Yeah, do you have to schedule there for what next Thursday's talk is going to be?
Yes. Thank you.
What is it?
I have it right here. Next Thursday is the 4th, and we are going to talk about how to select an online trading platform. to basically, yeah.
No,
go
I was
ahead, Joe.
wondering. I hadn't heard. I didn't want to miss it because I didn't think I had to. And I
Yeah.
thought mine must be the next.
Yep, I hadn't said it. I appreciate you talking about that. Yeah, so we'll go over a few of the platforms, the main ones. We've all used most of them, or at least a couple of them, or still actively do. Most of the people here got at least a couple accounts. So we'll talk about everything that we know about commission structures, different perks and technological features you can get with one platform over another. They all do slightly different things. So from all our perspectives, I think it'll be really helpful. And even if you have a platform that you're not really sure about, we don't get anything from this, right? We don't have any deals with any of the platforms specifically, so we're not going to steer you in a certain direction. But we want to show you kind of the different aspects of each to tailor it to your trading. So it'll be really good next week.
One time, Mike, I think I'd really like to do one. I think it'd be real interesting. The subject would be how Joe got fired from Merrill Lynch.
That's sound fun.
I can't imagine how, Joe.
No, it was.
What would have happened?
I developed a corporate technique for him. It was fantastic. Interest rate differential yacht finance. And for some reason, they thought I was a drug dealer. So we can go into that.
Interesting. Yeah, send it on to Dirk, and we might have to do that.
Right.
Might have to do that.
Exactly.
Just dropped like a rock. Ooh.
Yeah, craziness.
Ooh, those people that bought it, 400. Ooh, out.
And 5. Oh, it did hit 5.
Did it hit 5 today?
Yeah, 508.
Oh my gosh.
Interesting.
Oh.
All right. Have a great day, everyone. Be safe. All you guys trading out there, do your thing, but be safe. Things are changing.
Okay.
So.
See
Have a great
See you
day.
later.
I'll see everybody on Saturday.
Bye, guys.